Welcome back to Investing Talk Podcast. Today we're taking an in-depth look at American Airlines. The big question on many minds right now, is it a good time to buy American Airlines stock? We've pulled together some fascinating insights from various sources, including an analysis titled American Airlines Fundamental Strength, Technical Weakness, to really break down the latest for you. We'll cover everything, from their financial health to what the technical charts are signaling. Before we jump into the full details of our analysis, if you find this discussion helpful, please remember to subscribe, like, and maybe leave a comment. Your feedback truly helps us reach more curious minds. And if you want to support the show, consider buying us a coffee. Also, if there's a specific company you'd like us to look into, definitely leave a comment below and let us know.
Yeah, it's a really compelling case study because as that analysis highlights, American Airlines Group presents what you might call a bit of a puzzle, it's a mixed outlook, but cautiously optimistic maybe. On one side, you have these clear fundamental strengths and, impressive recent earnings, solid long-term industry position. But then on the other side, you're looking at valuation questions and some undeniable bearish signals from the market's technical pulse. So for anyone weighing an investment, understanding this duality isn't just key, it's really essential for navigating what could be a tricky landscape.
Okay, let's start by unpacking those fundamentals then. Our sources really highlight some strong indicators for American Airlines. What's the big picture here regarding their financial health, especially after all the turbulence the airline industry has faced?
Well, what's truly insightful here is just the magnitude of their rebound. American Airlines reported a record quarterly revenue, $14.4 billion in Q2 2025.
Wow.
And more than just revenue, they achieved a GAAP net income that's, generally accepted accounting principles, the standard measure of $599 million, which translates to about $1.91 earnings per share.
Okay.
This isn't just a big number. It really signals a powerful return to significant profitability after, years of disruption. It shows that underlying demand for travel is definitely coming back.
That's a powerful statement for just a single quarter, though. But airlines are, they're known for being cyclical, aren't they? What about their future outlook beyond that specific Q2? Can they sustain this?
Yeah, that raises an important question about consistency and, the road ahead. While Q2 was exceptionally strong, their adjusted full-year 2025 earnings guidance, it ranges quite a bit. From a slight loss, maybe $0.20 per share, up to a profit of 52 cents per share.
Quite a range indeed.
It is. And it indicates some lingering uncertainty in the broader economic climate, perhaps reflecting concerns about inflation or, a potential economic slowdown that could hit discretionary travel. However, the fact that they're guiding for potential overall profitability for the year, even at the lower end, that's still a positive sign. It shows recovery and resilience in their business model.
So with that picture of customer demand and profitability in mind, what does this all mean for their operational strength? Are they truly building a robust business, one that can withstand future challenges and really capitalize on this recovery?
Absolutely. Think about the sheer scale.
Yeah.
American Airlines operates a vast mainline fleet, 977 aircraft.
That's a lot of planes.
It is, and it represents enormous operational capacity. Plus, they hold a strong market position, both domestic and international routes, anchored by major hubs like Dallas-Fort Worth, Charlotte, Miami.
Right.
This kind of operational scale provides a really rock-solid foundation. It lets them capture a significant market share as travel demand continues to rebound. It's just hard for smaller players to compete with that kind of infrastructure.
And beyond the physical planes and routes, what about customer engagement, demand trends? Are people actually flying more and, maybe more importantly, spending more?
Yeah, that's where the human element comes in, right?
Yeah.
Their performance is strongly supported by continued growth in their loyalty program. They saw a 7% year-over-year increase in active accounts.
Okay.
And this isn't just about collecting points. It's about building customer stickiness.
Yeah.
Recurring revenue.
A loyal customer is a repeat customer.
Exactly. And we're also seeing a gradual but pretty consistent recovery in leisure and premium cabin demand. These are crucial revenue drivers. Leisure travelers are back, and more people are willing to pay for extra comfort or for business travel. That directly impacts the airline's bottom line. It shows a qualitative improvement in demand, not just quantitative.
Got it. Lastly, on the fundamentals, any insights on their balance sheet? Cost management. Are they tightening things up after the challenges of the last few years, ensuring long-term stability?
Well, while our sources didn't provide super detailed debt and cash flow trends, the CEO has highlighted significant improvement, both in cost management and overall balance sheet strength.
Okay.
And for an airline, which is a very capital-intensive industry, High fixed costs like fuel, maintenance, proactive cost management is just critical. It suggests a strategic focus on operational efficiency and shoring up their financial position,
Hmm.
which is paramount for navigating future economic headwinds or, unexpected events. This focus on efficiency can directly translate to higher profitability, even if revenues sort of plateau.
Okay, now let's shift gears. Let's talk about the price tag. If the fundamentals look promising, is the stock currently valued appropriately for someone thinking about buying in? Is it a fair price, or are investors maybe paying a premium for this recovery story?
Yeah, if we connect this to the bigger picture, how the market values companies, American Airlines currently trades at a trailing PE of 13.37 and a forward PE of 12.06.
Right, the price to earnings ratio.
Exactly. It tells you how much investors are willing to pay for each dollar of the company's past earnings or projected future earnings. A PE of, say, 12 to 13.
Mm.
It seems reasonably valued compared to broader market averages, especially given its prospects for earnings recovery post-pandemic.
Mm.
It's not looking overstretched from a volatile perspective. Suggests maybe some room for growth without being too speculative.
That certainly sounds like it could be an attractive entry point. What are analysts saying? Where could the price go from here? Are they mostly optimistic?
Okay. Well, the consensus price target from analysts averages $14.64.
Okay.
Which implies about a 27% upside from its current price,
Hmm.
which is around $11.42. And the analyst ratings also lean decidedly positive. You've got 9 buys, 7 holds, and only 1 sell. So this broad consensus among professionals generally supports that potential upside. It suggests they see the fundamental recovery translating into a higher stock price. They believe the current market price doesn't fully reflect the company's improving health.
That's a pretty strong vote of confidence from the analyst community. But is there another side to that valuation coin? Any signals that might contradict this optimistic view?
Indeed, there are. While our sources didn't give us a detailed intrinsic valuation like a discounted cash flow analysis, one price prediction algorithm anticipates a mild decline, down to around $11.23 in the near term.
Oh, interesting.
Yeah, it offers a counterpoint to that analyst consensus. It reflects some underlying bearish sentiment and volatility in the market. It suggests that not everyone sees a clear, immediate path upwards. Some automated models might be detecting short-term selling pressure or uncertainty, stuff that could push the price down slightly before it potentially recovers. It's a reminder that market sentiment can sometimes diverge from fundamental strength.
Okay, so we've looked at the underlying business, what analysts project, but what's the market itself doing right now? What are the technical charts revealing about American Airlines' immediate momentum, investor behavior?
Right, and this is where the story gets really dynamic. The stock price recently hovered near $11.49, which is notably below its 200-day simple moving average. That's around $13.29.
Okay.
And it's even slightly below its 50-day SMA, which is around $11.54.
So explain these moving averages again briefly.
Think of the 200-day SMA as the stock's long-term health check, like an average temperature over a year. When the price is consistently below it, and even below its shorter-term 50-day average, well, it indicates short-term weakness. It suggests potential bearish momentum. It's like a consistent headwind, signaling caution for investors looking for upward trends.
So it's trending downwards then. Are there any signals within these technical indicators that might suggest a bounce is coming, maybe for a short-term trade?
Interestingly, yes. The Relative Strength Index, or RSI, is quite low. It's at about 29.48.
And low RSI means?
The RSI measures the speed and change of price movements. Basically tells us if a stock is overbought or oversold. When it nears 30, like this, it's generally considered oversold territory.
Oh, okay.
So for some traders, this might indicate that the selling pressure could be exhausting itself. It potentially opens the door for a short-term bounce, like a stretched rubber band that might snap back. Offers a tactical opportunity for those who are nimble.
Right. Beyond these specific charts, what about the overall market sentiment? Volatility around American Airlines. Does the broader market feel confident or cautious right now?
Well, volatility for American Airlines is moderately high, around 5.20%. And the broader Fear and Greed Index currently signals fear.
Fear. Okay.
Yeah, this index gauges overall market sentiment, and fear reflects a cautious investor sentiment at the moment. High volatility, coupled with general market apprehension, it means price swings can be pretty significant and unpredictable in the short term. It's a reminder that even a fundamentally strong company can experience price pressure if the overall market is just plain nervous.
Okay. Beyond the charts and the balance sheets, what's been happening recently? In the news, public sphere, Stuff that influences investor sentiment for American Airlines. Any big headlines?
Well, their strong Q2 results, with that record revenue and net income we talked about, that was certainly positively received, generated some good buzz.
Sure.
However, the company, like the entire airline sector, really, continues to face these macroeconomic uncertainties, things that can affect travel demand. We're talking about stuff like persistent inflation, which impacts consumers' discretionary spending, or, the risk of a broader economic slowdown. These external factors can often outweigh company-specific news in this sector. It's just how it is.
So what's the overall takeaway then from analysts and the market buzz? Is the consensus still leaning positive despite these uncertainties, or is caution creeping in?
Analyst sentiment is, I'd say, cautiously optimistic, generally favoring buying positions, but it's definitely tempered by the current market volatility and those broader economic factors we just discussed. Interestingly, social media sentiment seems to align more closely with the short-term bearish technicals we observed. That might indicate that retail investors are being more cautious, maybe reacting more to recent price movements. And notably, our sources didn't report any significant insider buying or selling, which often serves as a pretty strong signal one way or the other.
Okay. Looking ahead then, what are the key events or trends that could act as catalysts for American Airlines stock? What should investors be watching for that could shift the narrative?
Well, upcoming earnings reports will undoubtedly remain key near-term catalysts. Investors will be eager to see if that Q2 momentum continues, right?
Makes sense.
The ongoing recovery of travel demand, particularly international and business travel, that'll also be critical. Beyond that, broader macroeconomic conditions, things like fuel prices, a huge operational cost for airlines.
It's huge.
Yeah. Inflation trends, overall consumer travel confidence, all that will significantly impact results. A surge in oil prices, for instance, could just quickly erode profitability.
Are there any industry-wide factors to watch? Things not specific to American Airlines, but that could still significantly affect its performance.
Oh, absolutely. Industry events like major regulatory changes, maybe new environmental mandates, passenger rights legislation could impose new costs. Potential merger activities, even if American isn't directly involved, could reshape the competitive landscape.
You're right.
Or significant shifts in international travel policies, maybe due to geopolitical events or new health concerns, could impact demand. While our sources don't indicate anything specific on those fronts right now, these are the kinds of broader movements that can create ripple effects across all the players in the airline industry.
Okay. So no investment comes without risks, and airlines are certainly known for their sensitivity to external factors. What should you, as the listener, be aware of if considering American Airlines? What are the potential downsides here?
Yeah, this raises that important question. What could go wrong? Sector-specific risks include the airline industry's notorious sensitivity to oil prices. Even a small hike in fuel costs can dramatically impact profitability. There's also that inherent vulnerability to economic downturns, potential pandemic-related disruptions, as we've all recently seen, and just intense competition, which can drive down fares and really pressure margins.
And specific to American Airlines itself, beyond those general industry risks.
Stock-specific risks involve earnings variability. We touched on that with their wide full-year guidance. Its dependence on the continued robust recovery of travel demand is also paramount. If economic conditions worsen, that recovery could definitely stall.
Okay.
The current market sentiment, those bearish technical trends, also suggest near-term price volatility risks. And it's worth noting it's beta, 1.36.
Explain beta again quickly.
Beta measures a stock's volatility in relation to the overall market. A beta over 1, like 1.36, indicates higher than average volatility. So when the market moves, American Airlines tends to move more significantly, both up and down.
Got it. Higher risk, potentially higher reward, but definitely more movement?
Exactly.
So after weighing all these factors, the strong fundamentals, the valuation, the technical signals, the risks, what's the overall verdict from the analysis we've looked at? What's the rating for American Airlines?
Okay, so the analysis gives American Airlines a rating of 6 out of 10.
6 out of 10, okay.
Yeah. And the reasoning is basically that the company has indeed improved its fundamentals significantly.
Yeah.
Record revenues, growing profitability, solid long-term industry position. That's all true. However, the near-term price weakness, that bearish market sentiment, and the ongoing macroeconomic uncertainties, they collectively limit enthusiastic buying right now. Its valuation appears moderate, which provides some cushion for investors, suggests it's not wildly overvalued.
Right.
But it's not exactly a screaming buy where everything aligns perfectly either. It's a company still navigating its way back to full strength in what's still a challenging environment.
Given all those factors, how should someone approach an entry point for this stock if they are interested but maybe a bit cautious?
Well, for those considering an entry, the analysis suggests preferring entry near or even slightly below current levels.
Yeah.
So around $11.40, especially given those technical oversold conditions we discussed with the RSI.
Okay.
A target around $9 to $10 could become particularly attractive if market volatility spikes and drives the price down further. That might offer a better risk reward for long-term holders looking to build a position.
And what kind of investor is this stock best suited for then? Is it for quick gains or more of a longer term hold?
It's definitely better suited for medium to long-term investors, mostly due to the ongoing fundamental recovery trends and its strong industry position. These investors are looking for the full realization of its post-pandemic rebound.
Right. Patience is key.
Exactly. Short-term traders, on the other hand, face significant volatility and that bearish momentum, though they might look for those tactical bounces near the oversold RSI levels we mentioned. But yeah, it requires patience and a longer view to fully realize its potential from the fundamental improvements.
And for those short-term players who might be looking for those tactical bounces, is there any specific trading guidance offered?
Yes, for short-term trading, a stop loss around $10.50 is suggested, just to protect against deeper declines and manage that risk.
Makes sense.
And a take-profit target near $13 seems reasonable. That aligns with the 200-day simple moving average resistance, which is a key technical level, often acting as a ceiling for price.
Okay.
Long-term holders, though, they should just continue to monitor quarterly results and those broader macroeconomic demand trends for reassessment, not really focus on the daily price movements. Their horizon is much longer.
So to sum it all up then, American Airlines is fundamentally recovering. It has a reasonable valuation, positive analyst sentiment, but it's currently facing short-term bearish momentum and broader macroeconomic risks, all of which suggests a cautious and targeted entry depending entirely on your investment horizon.
Exactly. This discussion really highlights that dynamic interplay between strong long-term business improvements and the, well, often fickle nature of short-term market sentiment. For you, the investor, it's not just about what a company does on paper, is it? It's about how the market perceives it right now, and whether those two things align with your own investment strategy and your risk tolerance. The key is discerning if the short-term headwinds are merely a temporary distraction from a solid long-term trajectory, or if they signal maybe deeper issues worth waiting out.
And that's our exploration of American Airlines. We hope this has given you a much clearer picture of the opportunities and the challenges involved. Remember, knowledge is power, especially when it comes to your investments. Until next time, keep learning and keep investing wisely.